All right, we are live again. It's time for the end of day post wave report with yours truly, the algo capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports. All right, so kicking things off. All right, as you know, we have come into a full trading week coming from the last week's holiday abbreviated trading week. And the market's trying to understand what it wants to do, you know? So if you look at this gold futures chart here, you'll see, like I told you, gold has a problem, all right? And it's called 1800. 1800 is a rough position for gold. For some odd reason, it can't hold it. And you saw it got way up here and looking like it was going to break 19, and it just collapsed all the way back down to the 1700s handle, ladies and gentlemen. And here we are. We closed well below 1800 today. The market is in full correction swing right now and getting close to the touching the Kumo cloud down here around the 1750 level. Right now, the bears are in complete control, and I see sideways to slightly lower prices within the next several trading sessions. As far as how this spills over, how does this carry over to the GLD? Well, here's GLD right here. Now you still have the gappage back from back here that needs to be dealt with. So we could get a technical bounce, but the question is not if we'll get a technical bounce, but when do we get a technical bounce? And as you can see, this one's still in a correction as well. GLD is dangling over the cliff like it wants to just plummet. And I think that we probably will continue to head down before the market heads back up, which leads me to believe that any downward situation that we see here may be short-lived, because you've got to come up here and deal with this gap at some point. Now, to go back to the gold futures chart for a second here, this right here is not a bearish pointer, but it's acting like the market's acting like it wants to come down there and actually take that out. So this is a weird situation right now for gold. It really is. You would think with the inflation being a fact that would help, you know, to at least have price action to levitate a little bit. But no, here's your GDXJ. It's not being spared. GDXJ is acting more like a commodity than a stock right now. The gold miners are getting hit from this. All right, so you see the gold mining stocks coming down. They're in a full-blown correction mode too, and looking like they want to get deeper into the Kumo cloud and maybe fall out of bed. So it seems that the trajectory for the gold mining stocks and the gold is heading in the same direction. Now, the next thing we're going to look at here is silver. All right, so here's your silver futures. Silver futures is having a problem too. It has a problem with $23. $23 seems to be quite a lot for silver, and it just can't hold it. So here you are back down below the 23 mark. Yes, you are in full-blown correction mode. You're below the trend line. You are below the Kumo cloud. You are in full-blown mature bear market on your daily chart. Really else nothing to discuss there. So then the next question is SLV moving with silver, or are we seeing some type of decoupling? And the answer is nope. Here it is. The only question that you have on SLV is the gappage. You gapped down below the Kumo cloud and kept falling. You gapped down to below the trend line support, and then you kept going and crashed down and closed below the Kumo cloud. So you're seeing that at some point market has come back up here and contend with this gap, but right now it's looking like in this mature correction, this market is gaining downside momentum and it's doing it fast. So you're not seeing the safe haven inflation assets perform as they should right now. All right. Now, if you take a look at what's going on with the US dollar, it's moving in the same direction as your inflationary assets. your inflation protection hedge is not working. It's breaking down. Here's the US dollar. Got all the way up to the 97 handle before pulling back. Though, just so you know, the US dollar has a problem with par. It has always had a problem with par. Every time it gets above par, it can't hold it. The market crashes right down back below par. For those uninitiated, par is 100, okay, or $1, however you want to say it. And right now, the market is headed back down again. It is now officially in a corrective mode. Momentum is waning to the downside. Looks like we're headed back down to the 94 handle here in the US dollar. So your dollar is getting softer. Your inflationary hedges are getting softer. And that is not supposed to be the case. There is a problem there. There is a real problem there, and we can't ignore that. Now, speaking about gold, let's take a look at the black gold. Here's crude oil. Crude oil futures have absolutely fallen out of bed. They're also in a very mature correction mode, right? You've fallen below the trend line support. You've fallen outside of the Kumo cloud, and you're doing it on an accelerating fashion. This is a bearish pointer. The lows are not in yet. The way this thing is headed, it wants to go back down to $60 a barrel, maybe even 40. It's looking very bearish on this daily chart. Switching it over to the weekly chart, and you see we came all the way down to the trend line support. And so far, ladies and gentlemen, this could be the week, depending on how this market closes, this could be week one of an official correction coming in crude oil, which means we could see crude oil get back down to sub $40 a barrel. I know, weird, isn't it? Doesn't really make sense when you think about what's going on in the world, but it is what it is. Here's OIH, the crude oil ETF. Now, you would think that, okay, well, you gotta deal with the gappage, right? Because it gapped on its way down, but then the market back and filled first, then fell down again, then back and filled this gap, right? And now it's just heading down. Where do you think the market's going? It's easy. I'll show you where the market's going. It's coming back here. It waited all this time to do it, but it's coming back here to the lows it made on August the 23rd. Remember, I showed you this a few weeks ago. I showed you this. I said the market has to come down here and deal with this gap that was never really closed out, right? That means the market needs to, OIH is going to come down and crash below 173.37. All right. It has to do it. It never done it. It never did it. So it has to do it. And that's where we're headed right now. More downside to come in your crude oil. All right. Taking a look now at what this is doing with bonds. Bonds was the only bright spot in the market today, but you really can't count it because bonds is really not a market. It hasn't been its own person for quite some time. We're talking years, decades, where the Fed has been manipulating this market. And yes, I have to say manipulating because they've been controlling it. All right, and they've had no choice because in order to keep interest rates artificially low, they have to maintain a particular pattern structure in the bonds. So they can't let the bonds get too low or too high. It's an equilibrium balancing act that they have to do with these bonds, and there's just no two ways about it. All right, so you gapped up, market came down the next day, and closed the gap here and then gapped up again. So I'm expecting it to have to come back down one more time because every time you have a gap, you got to come down and you got to deal with the gap, right? But right now, it's just in a longer term consolidated phase. The consolidation bar was back from September the 23rd, right? The market came down and broke that, only to come right back up to it, reestablish itself on November the 10th. Market stayed there for a minute, came down and dipped, then got right back into alignment, came down and dipped again. Now we're right back to alignment. Then it just broke out of alignment. So The market's trying to build an equilibrium, and it's been very difficult for the Fed to do this now. The balancing act is starting to break down. The October 23rd consolidation bar broke down, and so did the November the 10th. They're having a hard time keeping the price action consolidated at this point in bonds, which means the Fed is losing control of being able to manipulate and keep the interest rates artificially low. All right, that is becoming harder. You can even make an argument here that they've lost the ability to do that altogether based on the chart I just showed you. Here's natural gas. Natural gas, though, has been somewhat successful in keeping the consolidated range nice and tight. That bar is from November the 9th, and as you can see here, price action has stayed within the consolidation bar as it's supposed to during a consolidation cycle. And it's been happening inside the Kumo cloud. We've now broken down outside of the Kumo cloud. So it looks like the market is ready to put a new leg down. This bar right here is the first bar of a another consolidation pattern forming. So this one looks like nat gas is about to head lower again. And I know we're not in winter yet. We're still in the fall, but we're getting close, right? Getting close to that winter. Winter's just right around the corner. How they say it, winter is coming, right? Flipping the script a little bit, taking a look at the Forex side of things. Here's your Australian dollar. The Australian dollar has been coming down along with gold. You can see you can see the pattern here of the market giving it all back, right? Correcting. And you still are not out of the correction cycle on the daily chart yet. Now, we did come into today with a rally alert buy signal. You got a little bit upside production before the market just spiked down and made a bearish pointer. And looks like the market wants to head down lower. Even the bulls are having a hard time getting this market to bounce. No technical bounce yet. Taking a look now at the Canadian dollar. The Canadian dollar oil is not helping. You had the crash alert sell signal coming in today. No downside production as of yet, and you made a bullish pointer on the day. So very interesting to see what the market wants to do. Right now, it's hovering, being held by the consolidation bar of September the 20th. All right, which only held for 2 bars, and then it lost, then tried to gain it back here, and then just totally broke down after that. But that's what we managed to get back to. Bullish pointer, and this too is a bullish pointer. So price actions trying to get back up to this point, test or take out. We'll see what Canadian dollar will be able to do. But right now, as you can see on the Forex side of things, it's not all that much better. Looking at the real estate sector, this is ticker IYR, and as you can see, it is still very much so in a consolidation right now. But mostly it's a slow grind lower, but it's still a consolidation. As you can see, market broke down outside of that consolidation today, and it's now below the trend line. Support has now become trend line resistance. Next stop is the Kumo cloud. But still overall a very tight consolidation pattern at this point. And it looks like the range is just being stretched at this point. So I think the market will just stretch this out and then come back into alignment. And that seems to be what's going on right now in that one. Taking a look now at the Nasdaq. Here's the Nasdaq 100. The ticker is QQQ. As you can see, it's been consolidating up around here too. You put in a short-term top on this bar here. We got the downside production from the crash alert sell signal. We came into today with a rally alert buy signal. You didn't really get any upside production. Market reversed, but then stopped short right there. So right now, the bulls are keeping the Nasdaq 100 afloat. I think that even though right now you are technically in a correction cycle, you're not getting any follow through, at least not at this point. So this tells me that we may see another one of these situations where the market pops out into new highs. It will be a challenge and a test to do so, but we've seen the Nasdaq do this multiple times in the past. So Right now, it's sideways, but I don't know. We'll see. Well, all you need though is some real downside momentum to really make this correction cycle come into play. But it is in a correction cycle right now. The euro yen is not really helping either. It led, the market lower, but it's already gotten ahead of itself, and it hasn't stopped. It's still in a correction to the downside cycle. I think that the equity market is yet to even catch up with the euro yen. The euro yen is look at this, it broke hard. Came out here and took out the old supports, here and here, and it's still coming down. All right, the market's going to try to attempt another rally alert buy signal. The last one we got did pan out really nice. So perhaps the market will get back up to the 130 handle. We'll see what happens. But right now, we got to watch. We've got the rally alert buy signal. We'll see if we get any real follow through there. Switching over now to the crypto. Here's your ADA Cardano. All right, and you're still within the consolidation bar of October 21st. Nothing has changed there at all. It's still being magnetized there. Looking at Ethereum, got a nice little run today. Broke the correction mode and now is gone back into accumulation and rally mode. Here's the rally alert buy signal that we had coming into today from yesterday, and here's the upside production. So Ethereum, the rally alert buy signal played out rather nicely. Looking at Litecoin just really cannot get itself together. It's just still sideways. You had the crash alert sell signal. You got all this downside production, and now the market's trying to do something. You had a rally alert buy signal coming into today. The market gave you that initial pop, and then it just kind of yawned and said, "I'm tired. I want to relax." And that's because you're still under a correction right now. You're still under a greater correction mode and hasn't gotten out of that yet. You're not getting any breaks lower or new lows or new legs down, but the potential is still there because of the correction cycle. So you're kind of keeping things tight. Here's Theta right now. Theta is still very consolidated, just nothing going on there whatsoever. Here's your XRP Ripple. All right, and you had a rally alert buy signal coming into today. You got the initial upside production there before the slight pullback. Market's trying to regain some ground here. You had this correction cycle that's still very much in play. We'll see how much the bulls can try to wrestle back control here on your XRP Ripple. And last but not least, the very big boy, the talk of the town, the one that everybody wants to know what is going to happen. Does anybody know what's going to happen? And that is the mighty Bitcoin. This is the Bitcoin futures chart. As you can see here, we had a crash alert sell signal on November the 10th. We got all this downside production. Then we had the rally alert buy signal. Really didn't get any real amount of it. Instead, the market flip-flopped and is now giving us a crash alert sell signal for tonight and tomorrow's trading, and the market is on alert to crash below the Kumo cloud. If the market falls outside of that Kumo cloud, then that's going to put the market back to the 50 to 55,000 old consolidation zone, and that goes back here to September the 7th. So that's where the market is in jeopardy of doing right now. If you recall, its counterpart, Gbtc, which I'll pull up right here. Okay, here's your counterpart, Gbtc. You never really got this gap closed. Now here you got down to $32.10. This was $31.37. So you still have a way down to go in your Gbtc. Gbtc is calling the market much lower because you got the gap here that was done on July the 26th, and then the one prior to that, which was on July 21st, you gapped up. So those old gaps have never been reconciled at this point. Let's see here. Nah, we don't have mana and bat at this time. I'm working on adding some new ones, but it's just taking an awfully long time to do so. Hopefully, I'll have some good news for you on that front in the days to come. All right, ladies and gentlemen, that's all we got for tonight. Remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can, give nothing back. Remember to pop your way through these trades. The POP method is the method that we teach you at PulseWaveTrading.com, how to manage your open positions. And with that being said, smash that like button, and I'll see you all in the trading room. Peace.